Hey guys, what's up? Alec back with the daily stock market, and today we're going to be finishing up the video where we left off yesterday. So we're going to be talking about 5 more stocks to have on your watch list for the upcoming weeks. And we're going to talk about some of the fan favorites here. So get ready because this video is going to be a banger. So I know you guys like the shorter videos. Well, you guys did like them yesterday at least. So we'll kind of keep it short again today and see how things go. Also, I know you said you wanted me to talk about some different stocks. So this video will be kind of stocks I don't really talk about too often, even though I know you guys like me talking about like NIO, Tesla, and those kind of stocks, Apple, Amazon. We'll leave those for a later video. You know, we always talk about those at least once or twice a week, but we don't need to talk about them every single video. So here's the video for you guys if you want some different stocks also that I usually don't talk about. So the first one's going to be Corsair Gaming, CRSR. And this is a stock that's actually down pretty big, 15% in the last 3 months, right? And about 12% in the last 1 month. But overall, 88% growth in the whole year. Now, it was following a support and resistance right here for a while. That was pretty easy to predict, it looked like. But then it ended up going down, 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 right? So it's at a pretty low support. And I would say anywhere between the $30 price range and the $25 price range is a great buy for long term. And even at $32, if you plan on holding this one for long term, you're definitely going to be winning. This stock is all about long term, long term, long term. And if you're a gamer or you like gaming stocks in general, this one should definitely be on your list because it's actually probably my #1 favorite gaming stock as of right now. And you're probably going to want to be holding this one at least for 1 to 2 years if you're considering picking it up and building a position in it. All right, so next up on the list, we have HYLN, and it's going to HYLN, and it's going to be down 30% in the last 1 month. So it's a big drop, also 38% in the last 3 months. But overall, in the last year, it's still up 7%, which is not bad. So it's pretty much, you can get it at its IPO price right now, which, you know, when it was up to $50 a share in September, you probably never considered getting it at its IPO price again. Now, you can see there's hard supports at this one right at around $17. Those are now resistances, right? So I believe that this stock can be going back up to about $17, $16 a share for a nice swing trade. Now, you might want to see how low that this one can get because the support is right at $10. So it looks like it, in my opinion, it probably won't go much lower. But needless to say, this one can go lower. It is a riskier one on the list overall. But I think it's a very good buy right around $9 or $10 overall. And you can, I'm personally going to be writing this up to about $17, $16 a share. It could even go as high as 25 again. And obviously it can go, we know the stock market, how crazy it is. It can go as high as 50 again, but I'm not really counting on 50. I'm counting more on 16 to 20 to $25 range on the high side. In Q4, they did smash their expected earnings by a lot. So that's actually really good news. They're becoming almost profitable. And next quarter, if they become profitable, that could be huge for HYLN. Now, another one a lot of people wanted me to talk about was ROBLOX, RBLX. And on the trading day, Monday here, it's down almost 5%. So is it the hype over, question mark? No, I'm just kidding. The hype is not over on ROBLOX. This is an IPO, and after IPO, there's a lot of hype typically, and they shoot up a lot, and then they start to correct. So it looks like that ROBLOX is a fair price, right around 64. But personally, I'm going to be waiting at least a few months to dive deep into ROBLOX. I think I have I don't even have any position into them. They're at a market cap of $37 billion though, which is huge. And if you guys don't know what they are too, you can kind of read about them here. They're a gaming platform. I like Corsair a little bit right now for the value it's at. This is more of a high risk move because we don't know the true value of ROBLOX currently. Right now it says it's $37 billion company, but I don't know if it is worth $37 billion. So if this gets to like a $20 billion market cap or even like a $28 billion market cap, it's going to be more enticing for me to pick up some shares, you know, more around $50, $60 a share. So I'm waiting things to see how they shake out and see some actual direction from Roblox, because right now there's a lot of consolidation and there's a lot of hype around it. So you have to be careful, especially when a company just IPOs not even a month ago and there's a lot of hype around that company. You always want to be cautious and you want to do a lot of research on competitors that's kind of bringing in the same revenue and income, net income, that this company, Roblox, is, to see if their market cap is justified. Now, the next one up, we have AMD. A lot of you guys wanted me to talk about. It's down 16% in the last 3 months, so that is a lot. But overall, it's still up 63% in the year. So this is a hot stock, guys, up 2,000%, 2,600% in the last 5 years. I don't own any. I actually own some NVIDIA, and I will actually talk about NVIDIA in the next video because I know some of you guys wanted me to talk about that one as also. But look at that market cap, almost $100 billion with a PE ratio of 37. So it's pretty justified by the PE ratio. The price it's at right now, it's only trading at a 37 PE ratio, which is actually pretty hard to find in the market. So if we look at what the bulls say, AMD's recent CPU and GPU offering have been more competitive with Intel and NVIDIA's product, respectively. The move to this processor technology in 2019. So it's saying that it's actually more competitive than Intel and NVIDIA. But remember, Intel just got some good news that they are partnering back up with Apple. And it also goes on to say AMD has its sights set on Intel's dominant server CPU market share. So it's going after Intel, which is very, very important to note. And these chips that AMD is making have proven to be comparable or even superior to Intel's chips in some benchmark tests, right? So that's very good to hear that they are competing with some of the bigger ones. But I'll actually do a comparison video, AMD, Intel versus NVIDIA, and see which one I think is the best, most profitable company, best balance sheet, overall fundamentals. So I think that will actually be a really good comparison for me to do those three companies. So we'll definitely do that. But overall, I think 77 is getting to basically a pretty fair price. Obviously, I would want to buy closer to $60 a share. I don't know if that would happen. But I think that if you're going to be holding for long term, especially over the next few years, as they become more dominant, it seems like they're catching up very quickly to the benchmark tests, to Intel and NVIDIA. This is one that you're going to want to at least hold for 1 to 2 years if you're going to be getting into them. So if you want that deep dive comparison on AMD, NVIDIA, and Intel, give this video a big thumbs up, and I will do that for you guys. Now, the last one on the list today is DraftKings, and look at that. It's down nearly 7% today, so it's a good one to talk about, and it's down 17% on the week. If we go to the month, they're still only about even, and the last 3 months, they're still up 13%. And the last year, of course, they're up 366%. And what we want to do here is a small technical analysis. So if you guys have any chart like this and you see a technical analysis going on and you want to draw on your chart and you don't know how, I think Robinhood should definitely add that feature, because like TD Ameritrade, I really like how you can draw on your graphs and everything and make lines. So you can just click the screenshot, zoom it a little bit to what you want to look at, grab your ruler on the bottom, and then make some lines. So we want to connect here. And if you want to get better at looking at graphs and charts, by the way, I have a program to help beginners become more experienced and more comfortable in the stock market too. So it looks like that DraftKings is actually hitting a support right now. So it's implying that it's actually a pretty good time to buy. If you want to swing trade it between those two yellow lines, that would be a good time to swing trade. So I think it can easily get back to $70 a share, especially because a lot of people don't realize that sports gambling wasn't legal for a long time, and it's becoming more and more prevalent along the United States. For example, there was only like 1 or 2 states that can allow online. So there's a difference. There's online sports gambling and there's laws for online sports gambling. And then there's like sports gambling at casinos, which is a lot different and the laws are different. So for you to be able to online gamble, like on your phone, do sports gambling, that's a big deal because it was illegal in a lot of states. I think 90% of the states not too long ago. And now it's up to like 30%, 50%. So it's becoming more and more relaxed with the laws, implying that there's going to be a big demand. Just like anything else, like the MJ stocks. So with that being said, if you're a big believer in sports and online betting, and that's going to become more prevalent, I think eventually it'll be completely normalized and all 50 states will have online sports gambling totally legal. So with that being said, I would probably want to buy closer to about $50 a share. I think it's going to be pretty hard to buy $50 a share, but I think it's definitely possible because look at these big spikes and drops, these troughs and valleys that it goes through. Like, for example, September to November, it hit a 41% loss. And right now, it's even hitting a 17% loss, right? So it's a big, big fall. It has downward momentum right now, and it can continue downward. So I think $55 to $50 a share is the sweet spot that you want to start buying more at. But, it probably, if you're a long-term investor, it's not going to hurt to start your position now. Get your foot in the door, especially if this is a company you have your eye on. I've actually done comparisons with this company and ticker symbol PENN, Penn, before. And honestly, spoiler, I like Penn a little bit better. So I will talk about them in one of my next videos and kind of give an update on them. Now, just to kind of give a quick one, market cap 49 billion, 52-week low, look at that, $11. So overall, you do want to go in with a long-term mindset because the laws are going to be getting a lot better and sports are going to be ramping up. The stadiums are going to start to be filled again. More sports jerseys are going to be sold, more, merchandise, more people at games, which means when people get in that mood and wear the jerseys and go to games, they want to start gambling and betting on the games when they go to them. So that will improve DraftKings and Penn Gaming as well. So guys, that is the video. I hope you did enjoy it. Oh, look at that. We're now down $159 on the day, but it's still good because in the last year we are up 62% still. And it looks like that we are going through some turbulence in the last few months. So if you guys also comment below, let's show some love on this video. Share it with a friend if you think that they will find value in it. And don't forget to subscribe. This is the only place where you can find the full videos. And let me know if you like the short videos or the long videos. All right, guys, I'll see you in the next video. And remember, don't time the market, buy the market. Peace.